Paul, you're the stats guy. When was the last time we saw an intraday reversal like this? Quite a wide range.
Yeah, so I mean, if you look at days where we've opened down 2% and then finished the day up 2%, there's been 4 other times. 2008 it happened twice, 1997, and the 4th one's escaping me right now. But over the next week and month, if you want a positive sign, the S&P was higher all 4 times, 1 week later and 1 month later. So that's something to be encouraged about as we near the end of this day. And there's only a little time left in the day, but we've seen the market has a way of moving a lot. So we'll see what happens by the closing bell.
I knew you would have a pearl of wisdom there about what happens next. So, Mary, over the next week and month, we're going to get a lot of earnings. And that could be the next driver until we get another inflation report and a Fed meeting. So far, it looks like the market is reacting, I don't know, in an orderly way to earnings, down on the negative pre-announcements. Delta had a good number up today. What do you think we're going to see here?
I think we're going to see all this information get into prices. We've seen that so far today. Always a surprise to see so down early and then up later. But what we'll be looking at going into the earnings season is staying the course the way we do, focusing on high profitability stocks, value stocks, and small cap stocks. I think a lot of folks may be tempted to lean into quality going into this worries about recession, but we would like to caution folks, quality is more than just a term. You want to focus on what's going to drive what's going to drive a stock's return. And that's going to be looking at what their expected cash flows are. Yeah.
Really interesting, because we hear a lot about quality, and it's good to get a definition. So you're emphasizing profitability over quality. What do you mean, and where can you find that?
Yes. When we think about profitability, we're looking at operating profits over book value, and that's to focus specifically on the expected cash flows from a company and looking at that on a relative basis. Yeah, a lot of folks, when they say quality, they're blending together a lot of different metrics. It sounds nice. Quality sounds very comforting when you're looking at a tough market, but I would say it's not getting at what may drive a stock's return. Profitability drives return.
Paul, how do you approach earnings season? What's the strategy?
Well, I think what Mary was saying is that the market's going to price in a lot of the news coming up. And so what we want to look for coming into earnings season is what maybe is priced in. Everybody's expecting a terrible earnings season. We saw the same thing last quarter into last earnings season. Very low expectations. The market during that earnings season had its best performance during an earnings season going back to 2009. So you want to look at where expectations are very low right now. And this comes back to, I always like when different segments, say a similar message. And in your prior segment, you were talking about industrials being an attractive sector. Well, that sector has the second most highest pace of negative revisions of any sector going into earnings season. And when you look historically, when expectations have been that low for the sector going into earnings season, there's been about 10 other times where you've seen this degree of negativity or more. During earnings season, the sector was up 9 out of those 10 times for a median gain of about 6% during earnings season. So that's one sector where a lot of the bad news could be priced in already based on what we're seeing in analyst revisions. Even more downbeat than the industrial sector is the material sector. We've seen very high degree of negative revisions there. And for the broader market in general, we've seen a negative pace of revisions. So the results this quarter probably won't be nearly as good as they were last quarter, but expectations and the pace of revisions have been much more negative heading into this earnings season than they were last quarter as well.
Mary, Paul, we'll leave it there. Thank you both for joining me.